Hi ladies and gentlemen, this is Game of Trades and this is a video on the MACD indicator and how to use it. I'm going to show you a few strategies, a few tips and tricks to be profitable with the MACD or the MACD indicator. So MACD simply stands for Moving Average Convergence Divergence, and it is basically just two lines, a slower one and a faster one. The slower one being an exponential moving average that you often see traders trade with, is the trend above the exponential moving average or below. And this is simply just an indicator down below to make it easier for you to see where the trend is. Is it bullish? Is it bearish? And it makes it easier for you with a signal line, which is the red line right here, um, that will give you signals based on this exponential moving average. So as I said, let's get right into it, and I'm going to show you the first strategy you can use with the MACD. So first of all, there is a zero line here, you can see, and sometimes the MACD is above and sometimes below. And to put it simply, when it is above, the trend is bullish, and when it is below, the trend is bearish. So you do not want to be short when it is above, you don't want to be long when it is below, or at least not until it starts going back up. And you can see that's actually quite a good predictor. You can see here we went above the zero line and the trend was extremely bullish. Right here, we crossed below the zero line and the trend was extremely bearish. And here we crossed above, bullish. If you just trade with these crosses at the zero line, you are already profitable, and you can just solely trade on those and make profits. So that's the first strategy with the MACD. It's very important to keep how bullish or bearish the trend is in mind in your trading. One thing to say, by the way, this is an hourly chart of QQQ. It's basically the NASDAQ 100, a little bit different, but it's an ETF. And this is an hourly chart from around February. But MACD obviously works in multiple time frames. It works on the daily chart, on the weekly chart, and obviously if you identify a buy or sell signal on the daily time frame, it will have consequences longer term than just the hourly chart. So next little strategy here is another simple thing you can use, and that is obviously the signal that the MACD gives you. So on the hourly chart, you get a little bit more whipsaw signals, but as a rule of thumb, when you have a crossover on the MACD, a crossover, the blue line crosses down on the red one, it is on its own a sell signal, and you can see that did give us a small drop. Alone, it can give you a lot of whipsaw signals, but combined with other strategies that I'm going to give you in a couple minutes, it can be extremely effective. And I'm going to show you on the daily chart that when you get much cleaner crossovers, you can see right here, for example, on the hourly chart, you have this crossover at an extremely low reading on the MACD, and that's one thing that I like to say, that when the MACD is at extremes, like close to 2, here it's at 2.5, and it crosses over, it almost always ends up following with a big move, just because the momentum has gone way too much in one direction. You can see this was a huge drop, and when the MACD crossed over for a second time here, it snapped back up. So a crossover, a bullish or bearish crossover at an extreme reading is a very good buy or sell signal. You can see we had here an extreme reading again with a bearish crossover, and we did have consolidation for a few days, so that was on its own sort of a sell signal. And we had the same thing here, again, quite a high reading, and we had a nice little drop. And same thing here, we had a sell signal, our crossover here, and we had a huge correction. So those are the two main you know, strategies that most people use on the MACD. It's the most simple way to use it, but that's not the way that I use it. It's not the way that you should use it. Um, and I'm gonna show you how you should use it, and that is for those who know this channel and have been following me. It is what I use in my trading, and that is divergence. And the sorry, a divergence strategy on the MACD is extremely effective if you combine it with these other two strategies. So I'm going to show you. What is divergence on the MACD? It is when you get a series of higher highs on the price. You can see this is two, a high and a higher high, whilst the MACD makes a high and a lower high. What does that mean? It just simply means that price is continuing ahead of itself, whilst the momentum is waning down. And it's the same thing in the opposite direction. You can see right here, you get a low and a lower low, whilst the MACD makes a low and then a higher low. You then get a nice little rally here. So those are already two examples just on one hourly chart of divergence, and if you spot them, you can. There's so many of them. You can see right here. There's a high and a higher high with a low and a lower low on the MACD, which led to this nice little correction. And same thing here. You had a high and a higher high with a high and a lower high, and that extended this divergence and led us to this huge downside. So this is how I use the MACD, and you can see how effective it is. You only get divergence when the trend will change. So not only is it an indicator of where the trend is, but it can give you an idea of whether the trend will change. And accompanied with a crossover on the MACD, where the signal line crosses down on the exponential moving average with divergence, you are almost 9 out of 10 times likely to get a correction or a rally, depending on which direction you have. And you can see here, you don't always have divergence to have a rally. It's not something that happens every single time. You can see here we had a low and a lower low, but the MACD didn't really make a higher low. It actually made a lower low too, so we don't have divergence here, but I think we did have it on the RSI. Now, one last tip I'm going to give you guys to trade with the MACD is that it can obviously be used with simple strategies or simple indications like trend lines or break of trend lines. You can see here we had a nice uptrend line on the hourly chart, and accompanied with divergence, it led to this break of trend line. We had then a back test, and then we had a nice move down. So this was just a perfect trade setup with divergence, break of trend line, and a bearish crossover confirming the divergence. and that led to this sharp rally. So, you know, um, just this from the break of trend line, you could have made 11% profit on the broad markets, and this was an extremely simple trade to make if you knew the strategy. So that's about it, guys. I hope you enjoyed the video. I hope you learned something new. If you did, make sure to like and subscribe if you haven't already. And see you next time.